Martin, let me ask you first why this particular deal. It's the first deal by your SPAC, your blank check vehicle, if you like. Why this?
Hi, Bonnie. Thank you. Well, I'd say the first thing is it's good to do a deal in the United States with all of the uncertainty that's going on with foreign currencies and trade wars, et cetera, et cetera. Buying something that's very much U.S.-centric and North American, 95% of the businesses in North America, that sort of fits for us. But we've been looking for a company for the last couple of years that not only fits from a valuation perspective, but also ticks the boxes on the things that are priorities to us. And so this is our kind of business. It's very diverse in its sector. It's a leader. The life safety business is by far and away the market leader in the U.S. It's a great business. It's a growth business in terms of multiple avenues for growth. It's a very fragmented space, so there's a lot of acquisitions to do. It's got a great management team. It's a great foundation platform to build off of, which is why we did the deal.
Martin, is there any macro strategy here? Are you buying a company like this because you think there will be an infrastructure plan eventually in the United States, or fiscal spending, or is this purely a valuation fundamentals acquisition?
No, I mean, I don't think we are relying on an infrastructure bill or anything like that to justify the transaction. You know, we're buying it at the right price as an entry point. It stacks up very well against the comps. Obviously, to the extent there is infrastructure initiatives that take place in the U.S., and everybody knows, the U.S. is in need of a lot of infrastructure investment, that will be a tailwind for this business. So that's a potential upside for us, we would obviously enjoy. But for us, it's a play. I mean, this company's got 15,000 talented, skilled workers, and really this is a play on the macros for the U.S.
Martin, it's Ed. When you talk about the us here, obviously you refer to yourself, Jim Lilly, Ian Ashkin, who built Jarden and then have come back with J2, the SPAC here. When I think of you guys, I think of deal makers. You go out, you're very good at acquiring companies, building these conglomerates like you did with Jarden. But this company, API, it seems good at that already. It's done a lot of its own deals. It's built successfully through that strategy. So what do you as a team bring to this company?
It's a great question. I mean, the reality is that it's very complementary to what we already know how to do. But if you look at what they've done it on a relatively small scale. I mean, they've built a $4 billion business, but it's been multiple small acquisitions. I think where we will be helpful to them is, if you like, in the coming years, looking at larger combinations. So we would love to scale this business. If you recall, Jarden, we started off as a $200 million business. We ended up as a $10.5 billion business. We have the same ambitions here. We're in it for the long term, so it's going to take a number of years. We have to have this company be well positioned as a public business before we go and take those kinds of steps. But this has the potential to be a far larger group than it is today.
And you've obviously had the call with investors this morning. What's the feedback there? Because this is an interesting company and potentially one that takes a bit of explaining, because it does, as you say, have such a diverse portfolio of assets.
Yeah, I mean, I think we've gotten some great feedback, a lot of sort of how did you find it type of calls. There aren't many deals in this market where you can buy a company for 7.5 times EBITDA. Everybody knows, who's done the work, knows what the comps trade for, and there's a pretty good spread between how we're buying and where we think it should trade as a public company. It was worth waiting for us, and we'll have the opportunity to go out and see investors over the next a couple of weeks to give people much more color on our goals with the business. But so far, universally supportive, which is great.
So, Martin, this particular transaction, $2.9 billion, it's being funded through a mix of cash, also, new debt, rollover equity, and so on. How much firepower is left at J2, given that you raised $1.2 billion in 2017? What else do you have, and where else are you looking?
So we're bringing in about. I'm not sure if I understood your question, but if you're asking about J2 itself,
yes.
we're going to be conservatively levered. We're going out to see our investors to have the warrants that exist in these kinds of vehicles exercised up front, which is something that we've had in really all of our previous vehicles. As you know, I've done multiple transactions in vehicles over the years. And bringing the warrants in up front does two things. One, it eliminates any warrant overhang in the future. And second is it provides additional capital to keep a more conservative posture so we have more capacity within a very short period of time. And our intention is to go out and do the same here. So that'll bring in another $300 million on top of the $120 or so million that my partners and I are contributing, as well as that of Viking Global, one of our largest investors in this entity. They're exercising their warrants up front as well.
Martin, I got to ask, you now, this adds to your portfolio of existing businesses that you either chair or have founded or have financed in some way. And you have agri-chemicals, Fish Fingers in Nomad, obviously, and now sprinkler systems and other businesses under API. What's the commonality there? Is this just purchase price that justifies these deals, or is there something underneath it all that kind of links them?
Not at all. It's not purchase price. I mean, purchase price is an entry point. And really just ends there. If you bought the wrong thing, it really didn't matter what price one paid. If you bought the right thing, sometimes it doesn't matter what price one paid. What I will tell you is for us, the common themes are we back good management organizations with businesses that are going to be around for a very long time, businesses that are, Amazon-proof and things like that. I'm trying to build long-term value.
That's
and
wonderful.
Trying to ally with great management.